March 3, 2014 Real Estate Capital Scoreboard March 2014 Chicago, Illinois, March 3, 2014 through February Treasury notes moved within a tight range, settled to the same levels of the previous month. Bond investors are faced with juggling their portfolios based upon the delicate balance of inflation versus slower employment growth. At the same time, the stock market enjoys record highs, leaving little room for capturing profitable yields. These factors translate to the continued tightening of mortgage spreads over treasuries, with borrowers completely in the driver's seat. As lenders and equity capital sources refine their funding objectives for 2014, more is the most important word in their vocabulary. More capital, more creative underwriting, more flexibility, more leverage and more competition are among the mores. The following highlights illustrate this trend. Lower leverage loans are approaching historically tight spreads, while full leverage loans continue tightening, indicating that investors are pricing risk much more aggressively than in the past due to their profitability. Most mortgage rates are priced in the middle single-digit range, while high leverage, creatively structured loans approach the 7 to 8% range, indicating further tightening of spreads between various debt funding structures. Interest-only options have returned to both CMBS and Life Co quotes. Agencies remain optimistic to stay on path with their mandated funding goals, offering greater flexibility in structuring loans for multifamily properties. Many lenders have tightened their pricing by 10 basis points or more, especially for shorter-term debt of 5 years or less, as banks aggressively re-emerge in the lending arena to battle for such funding opportunities. Both life insurance companies and Wall Street have higher funding allocations, targeting more loan dollars, especially for longer-term loans of 7 to 10 years. Homeownership prospects are improving, helped by new construction and lowering credit criteria by banks. Commercial properties are temporarily paralyzed as consumers stay sidelined due to the nation's struggle with drought conditions on the West Coast and freezing weather in the Midwest and East Coasts. The desire to increase business is there for almost every lender, but tight pricing at full leverage within the mortgage market leaves little room for funding mistakes. Lenders acknowledge that now more than ever, they need to be diligent on enforcing underwriting standards, but offer some creative structures if warranted by the deal, remarks Gene Peck, the director of the Real Estate Capital Institute.